Thanks, guys. Appreciate it. You guys can start.
Good morning. Thank you. I don't know what he said. I think it was something about the Beatles. Was that? Thank you for joining us here. My name is Azar Quater. I'm an independent sponsor, but I've had I would say, fortune and blessing of being on both sides. I actually spent some time with at a family office for a guy by the name of Joe Plumeri. Some folks may know him. He was the former CEO of Willis, former CEO of former vice chairman of First Data, former vice chairman of Citigroup under Sandy Weil. So I've gotten to see both what it's like to be inside of a family office, and I've gotten to see what it's been like to be an independent sponsor, chasing family offices for money. And so I think this panel, we're going to talk about raising money from family offices. Kevin can talk about his background at a family office as well too.
I think since we're in the Beatles room, it should have been retitled "Help, I Need Some Money" for family offices, or maybe "All You Need Is Deals." How to attract family office capital. I don't know. I'm sure there are a lot of other Beatles puns that we could throw out there. Anyways, my Kevin Myers with First Haven Capital. We're family office, part of a family office group here in New York. We've been active in the independent sponsor space formally for the last 4 or 5 years, and personally for about the last 10. And we've done, I guess, about 9 deals in the last few years. From the family office perspective, there's the old adage that everybody knows about all of them being different. The other thing that I think really attracts family offices to this space is there's no such thing as an overstaffed family office. So if you're looking for deals and you want to try to do them and you don't have a big team, the best way is to partner with folks who are really good at it. And we see that as being the independent sponsor world. So we'll start, I guess, Azar, if you want to talk about your experience having worked on both sides, and then I can hop in.
Yeah, sure. So again, my name is Azar Quater. Queens Court Capital is my firm. We've put out about $100 million in the last several years across 8 platforms, I think 9. All pretty much 95 to, I would say, probably even more than that, of all the capital has been from family offices. Some very large ones, some more high net worth types. So I've seen the gamut of how these families work. I've seen the gamut of the different strategies. What I've seen is, and I've also been on the other side allocating to other deal guys and independent sponsors and funds and stuff. And so there was definitely a big rush in the last 5 to 10 years of family offices going direct, wanting to have exposure to deals as opposed to being in the next KKR fund. And so there's been enormous growth in the whole family office market. But as Kevin mentioned, no 2 family offices are alike. So the way I kind of group them is there's pass the hat family offices that are truly passive, that are writing $500,000 checks, maybe $1 million checks. Those are great investors to have because they can move quickly. They're not going to get in the way of kind of deep underwriting and diligence. But they can be a real nuisance and pain in subsequent years once you're dealing with K1s or administrative hurdles and things of that nature. And the other end is really institutional quality family offices. So think like the MSDs of the world, the Willits of the world. Those are great partners to have. I've done transactions with partners of such ilk. They're pretty much private equity firms, and they're going to give you private equity firm economics, which are really independent sponsor type economics that you'll get from a typical private equity firm. And but they're a one-stop solution. They can do oftentimes credit and equity in deals. They could do different types of creative strategies. And, but the underwriting takes a long period of time. So I've seen the gamut of it. I think what I'm seeing now these days is that the smaller family offices / high net worths are slowing down. Many of them were doing a lot of venture deals as opposed to kind of private equity and real estate and deals like that. And obviously the venture world has slowed down. The tech, as evidenced by a drop in kind of valuations. So that side is slowing down. But the other side I've seen is still active. It's gotten harder though to get deals done because there's just there's been a pullback in conservatism and pullback in in deploying. But we've been still active and successful in raising capital from a variety of groups and everything.
From our perspective of what, when we're looking for deals and when things come across our transom, how are we evaluating them? How are we kind of getting beyond the kind of first, the teaser and kind of diving into things. And a lot of that for us is really a clarity of message and understanding why is this the deal for this sponsor? How are they, how are they really approaching the value creation or what is it that makes this the right deal for them? Because it's got to be something compelling. It's not just about the business. It's the fit for the sponsor and the deal. So having a clear message and articulating that, will help drive us to be like, oh, this is something that, has some real potential. We should dive into it some more. And for us, we'll take a look at a lot of different things. But a lot of family offices will really look to hone in on specific areas. It's either things that family members are attracted to, for larger institutions, or larger multi-generational family offices. There's, the younger generations focus a lot on ESG, those sorts of things. So it's kind of having a clarity of message of what the deal is bringing and why it works for you, can drive a lot of, appeal and to different families. Again, there's even if you've got, the Willets and the large guys, there are a lot of different flavors and not every deal is for every family or every family office. I think as you are meeting folks, and understanding what their capabilities are and how comfortable they are at assessing opportunities and thinking about things, because we've heard a lot of situations where family offices will kind of hang around and then at the 11th hour, they'll, nix a deal for, a reason that they should have known day one or that they knew day one. So it's, we try to be good partners and kind of hone in on what our kind of key issues are, at the beginning, so we can kind of work through those together. But as you're looking at the family offices, thinking about, okay, how are, we don't just want to, you should look at it as more than just a check, but how comfortable are they at kind of really understanding it? And I think that's just a matter of understanding the questions and what their backgrounds are.
You want to go through an example of something you guys did with a recent example with an independent sponsor or a deal itself, potentially?
Yeah. So, I'm trying to think of a good example. We invested in a home care business about 2 years ago, year and a half ago, that was based in Texas. So the family office is based down there, which adds some familiarity and knowledge about the space. There had been some family members that needed some of that care, so we had personal experience. But then we also had a network of people that we knew in the space, some former executives who ran a large family home care business, home care, home health. And we're able to use that to kind of really understand the opportunity and talk with the sponsor, who also had owned another business in the space. So that got us kind of comfortable of thinking, all right, this is something that's interesting to us, that we have some experience and are saying of the sponsor is bringing an angle because they own another business in this space. And then for us, we like roll-ups. So, the sponsor was aware of that and they had a lineup of kind of 3 different add-ons that they were looking at. So for us, it was kind of triangulating all the different pieces. that would kind of really fit how we look at it. Again, it's something that you have to, it is a little bit of, because it's not large institutions that have specialty groups within, different areas. It's finding the right families of who have certain experiences. There are a lot of different family office groups and institutions that you can, organizations that you can talk to try to get different access to folks that do this. There's in New York, there's this group called the Met Circle who does a lot of who have a lot of families that do both fund investing as well as kind of direct investments. There's the Family Office Exchange. There's FOA. Fidelity Family Office organization has a bunch of that. So there are different groups that you can get to kind of access different family networks. We find also that we spend a lot of time networking with other family offices. A lot of it because people have different backgrounds and experiences. Family offices are based off of wealth creation, and you can find people who have expertise in certain areas. We were looking at an optical retail business at one point, and we know a family office that was from the Pearl Vision the family that started Pearl Vision. So being able to talk with them and network with them to help, it also, finding the right groups can also help the deal efforts, right? In terms of resources that they may bring to bear. Our family background has some automotive and industrials, so we've done a couple of auto deals because we've been able to tap into our networks there to help the businesses.
Yeah, I can walk through the last deal I did, which was all family offices, and I'll tell you, walk through live by live how we ended up raising. It was at the height of COVID. So a lot of people who know me know that I do half the deals we do are like distress for control transactions where we're buying companies through the debt or bankruptcy processes, things like that. It's a expertise I've developed over the years. I've worked on at various firms. I've worked on some pretty big bankruptcies. And so at the height of COVID, I had an operating partner in the beauty and hair care space. And we were starting to look for deals, and we were seeing a lot of interesting deal flow in the hair care and salon space. And so we saw this deal that we ended up doing called Hair Cuttery. It's the 4th largest hair salon operator in the US. Before I did that deal, I used to have a lot more hair, and now it's thinning out pretty rapidly. But that business was owned by another family that over-levered it. COVID hit, and it really destroyed the business. And so we ended up buying the debt for cents on the dollar, used a position in the debt to take control of the business, put it through a bankruptcy. And I personally worked with a group to renegotiate over 500 leases. We cut the portfolio from 850 locations to 500 and put it through a bankruptcy, 45 days, exited bankruptcy, did a 363, which is known as an asset purchase in a bankruptcy. You can buy a company and leave all the liabilities behind. So how did I end up raising the money for this? We raised $45 million in 2 weeks. A lot of it was just new relationships, but they were built over a period of time. These were people I knew through my career. Some of them were headed up the different investment banks that I worked at. Some of them were private equity fund managers that retired. We had probably, I'm not going to say how many numbers of investors we had, but no single investor accounted for more than 15% of the entire capital. So you can imagine it was a hodgepodge of capital there. But that was an interesting situation because it was rapid fire, talking to as many families that we knew. We had existing investors that came in that anchored the purchase of the debt, but we needed to raise additional capital for the debtor in possession loan, as well as working capital for the business and everything. And I remember this is the height of COVID, thinking, how the hell are we going to do this? And so we ended up talking to a bunch of families, and every single family referred us to another family. And that's how we ended up getting it done. And we closed that transaction. And we ended up taking 70 million of costs out of the business, getting the business back to profitability. And then a year into our hold, we did a dividend recap. We returned 107% of our investors' money. We teamed up with HIG Whitehorse, who's actually here, that did the financing. Every single one of these investors now has called me back and said, "Can you find me another hair cutter?" I'm like, "Yeah, it's like going to a supermarket and picking it up and everything." But I'll tell you an interesting. Sorry, go.
I was going to say, how did, I guess, through your process, like how did you keep on top of, all the different families or all the different capital sources?
Yeah.
Were there,
like I said, I
touch
had a lot
points?
more hair, and so I had a few partners. We kind of did a lot of divide and conquer there. It was we started with big ones, and that's what led us to. So the bigger ones were the $5 million checks, and then it led us to the $2-3 million checks, and it just snowballed pretty quickly from just referrals and talking to folks. But there was, prior to doing this deal, I was doing smaller deals. I was doing $10-15 million deals with smaller family offices, retired executives who are often the best partners because they have an operating view sometimes. And a lot of retired private equity guys that started there, still had an itch to do deals. They didn't call themselves family offices, but they were sitting on quite a bit of money being a retired partner at KKR or something. And they just, how I got to them was just through introductions and referrals and saying, "This is a deal I was working on." Joe introduced me to a bunch because he was a senior advisor to KKR. And so that was helpful. I guess right place, right time, being inside there and everything. So that was partially part of it. But yeah, keeping track of it was it. But I probably wouldn't do that again. I would rather give up on economics and have one or two partners than dozens of partners, because it's a royal headache. The smallest check calls you all the time asking you, "Hey, you thought you were going to get a dividend by this date, or you thought that margins would get better by this date." It's just, and that's the hassle factor with smaller checks. Now you get better economics on smaller checks, but the hassle factor is a royal pain.
I was going to say that from the standpoint of, we've looked at, if you go to brokers or use some more, additional help, you can drive better fees and things like that. But, the smaller checks can, they'll crowd the smaller checks for you. Larger, sophisticated folks will often push, or they'll want more governance. It kind of goes to what the sponsor is looking for from, how do they want to handle the deal? How do they want to think about governance? Do they want to give up board seats? Do they want to, how should those relationships work? We look at it as we're passive in nature. So it's trying to be, you can't be all things to all people. And there are sponsors that we're not great at working with because they want to just, they want, sponsors who are active, or they want to do it as more of like a finder versus, kind of the control side. It kind of varies, but.
The other thing that we found helpful was, so I've been doing this now for several years, and what we found helpful was identifying the types of family offices by asking certain types of questions. And the one question I do like to ask at the beginning of a meeting of family offices: are you in the MOIC business, or are you in the wealth preservation business? Because there's some guys that have made a ton of money and they still want to put out money into deals, and they're in the MOIC business. They just have that itch. They want to look at deals. The folks that are more wealth preservation, it's a different mandate. It's a different kind of animal in its own self, and you can almost categorize it's not great. It's not black and white, but you can categorize the world kind of in those two different areas.
The other thing that's very attractive for family offices that I don't feel independent sponsors actually discuss or think about is with smaller businesses, you can get QSBS I guess designation, Section 12, which is very tax advantageous for private investors, and I think it works for the independent sponsors as well. But it's something that if you're, it's often kind of seen as a venture capital, trick, but it applies to a lot of independent sponsor deals. And I think if you are promoting that and you're looking at structures when you're talking with your lawyers about setting it up so that it can be, and there are different restrictions of size and number of employees and types of businesses. You can't do financial institutions and things like that. It can be very beneficial for high net worth and private investors.
Yeah, we've seen that particularly the venture guys have done a good job doing that. But yeah, we've started to see that in some private equity deals as well too.
We've tried to push it, but oftentimes when we're coming in, there's basic structures in place, and it gets more complicated. But it would make it changes our return profile dramatically if from a taxable perspective. So
the other thing I found interesting is where the family office, where they have had the source of wealth, is oftentimes a good indicator of the types of deals they like to do, whether they're doing a lot of small checks versus big checks. So, for example, the family offices of private equity executives typically do bigger checks, but chunkier, smaller. Maybe they'll do 3 or 4 deals a year, versus executives that were in the venture world or executives in other industries, maybe a technology business. They'll do a lot of smaller checks and spread themselves way too thin. Great in some cases if you want that type of a partner, not so great in other cases if you're looking for kind of strategic help and everything. Yeah, sure. Yeah, this is supposed to be interactive.
There's a lot of discussion about size of checks and whatnot. It makes me wonder, these family offices, when they've constructed their portfolio, is direct investing active, let's call it active investing, because they're selecting an independent sponsor measure versus managed money in blind pool funds. Does it end up, does the slot for direct investing get counted in the private equity slot, or is it a separate slot? So, okay, this is managed money, my expectations are different than this direct investment.
Yeah. So the question was, if you couldn't hear, is how do family office think about, where they're putting a direct investment? Is it private equity exposure versus somewhere else in a portfolio? From our perspective, we bucket it as private equity. We look at it as a replacement for our blind pool funds, because we're looking to build a portfolio. There are other situations where families will look at them if it's it depends on how active they are on the direct side, right? There are other family offices here who, are constantly looking for deals. Some to the point of, they have a specific industry interest or something like that. They'll look at it as kind of a carve out or something not part of their overall, kind of asset allocation, right? If they're kind of more transient, then it won't necessarily fall into a square bucket. But it really kind of depends. The other thing from that standpoint is it is it a family member or the capital provider, or is it a third party in terms of, if they've got, if it's a hired person, right? How they think about where they're going to put it can be very different. So it kind of one of those.
Right. That's a good point. If they have staff, right. That's another indication of how they're thinking about it as well too.
Any other question? I guess we can open it up if there's anything else.
Have you guys increased your activity lately, or how are you thinking about the macro and kind of where you guys want to be and everything?
Yeah, so we've, I think that's one other dynamic that, given the market environment, family offices, will, I would say, tend to be more steady in these things. If we've heard recently from some large allocators that given like corrections in their, in their public, in their publicly listed or more liquid assets are falling, their exposure to privates are increasing. So they're cutting back on their investing activity. We've seen that with large pensions, with with different fund of fund type models. So I find that family offices we talked to, this is an important part of they don't have such a rigid asset allocation or a rigid way of thinking about where their pockets are, where, if they see deals, they'll go do the deals. Or if there are things that they like, they're not thinking, well, this is now going to put me X% above what my target private exposure is, so therefore I'm not going to do it, or I'm going to cut back, or whatever the case is. So I feel like there is more flexibility that family offices have on that side. There is, what there also, I think, tends to be within family offices kind of trends where you're talking with different family, it's an insular circle, right? So if you go to the West Coast, it's a lot more tech VC. If you are in New York, there's a lot of real estate of way people think. So I think you see trends and movements in different areas of where families will look to invest, and that often can lead to helping round out pools of capital of families looking to work together. You go to Dallas, there's this area called Old Parkland, which has like a bunch of family offices, and a lot of those families kind of tend to talk together, and so you can kind of find pools of capital from a bunch of different people who will work together. And that was kind of the scenario I was telling of the optical retailer will look to bring in other if somebody else knows about an industry that can help, rising tide lifts all boats in my mind. So we try to be constructive in bringing in other like-minded families or institutions to try to help the capital pool.
The one thing I've found, and I probably interact with now over 500 family offices, from the big ones all the way to the small ones. The one thing I found is that's interesting. I'm curious to get your thought. Is there's no institutional imperative to actually do anything. And that's always the challenge, right? So versus working with like, there's a lot of SBIC funds here. There's a bunch of, private credit funds, one-stop solutions, private equity funds now that are looking at the private equity. They have to get the money out within a time period. How do you think about that as a family office yourself?
Yeah, I think that there is, the benefits of the growing private equity, ecosphere is that you're finding a lot of family offices now bringing in private equity talent and folks who have exposure to the different marketplaces. It's a more sophisticated environment. So I think that those individuals tend to, they tend to be, these repeat, they'll constantly be looking for opportunities. The ones where you're finding where it's not the imperative are kind of the more, not fly by night, but kind of
Smaller.
Yeah, well, they're not focused on kind of constantly looking, and but that's how I would look at it. You'll find that there are, and we get asked this a lot, like have you invested in independent sponsor? How much, what type of deals have you done before? I think that's I think it's a telling question of how important making these allocations are to folks. And that having dialogues about what family offices, it can often be a hard realm to crack into, but once you do, I find that we tend to want to talk about, changing information is always better from my perspective. So talking about our portfolio, we put all of our companies, we talk about them and try to help them, because if we're talking about to one sponsor about an opportunity, it might be, I was actually just emailing, we have a investment in a cheese company and a food distributor, and I just kind of put the two companies in touch to try to help foster things. And I think that you'll find more family offices are trying to help out.
It's kind of like that old adage about the country club chatter, like, I just did this deal with this young guy, you guys got to do that deal. So that's how like it kind of, your network starts growing very quickly. I've seen. Sorry, there's a question here. What's been, sorry to,
What have been the tips to success? What have been the best policies in the 10 to 50 conversations? How do you put the access?
it's just been compounding on relationships. That's really what it is. Doing right by folks, introducing folks to others, has worked. I do like to network a lot. And so it's part of the process. And so it's just compounding relationships. It's getting into these different circles. It's really interesting. You mentioned the circle in Texas. I know some of the folks there. The circle, that money is so different than the New York money and the Los Angeles money and the Seattle money and Chicago money. There's so many different groups. There's a group of family offices that I've gotten to know that just spun out of all the Tiger clubs, like all the Tiger guys that have retired. I've gotten to know a lot of them, and they don't want to do anything tech. They want to actually diversify away from it. So they're actually looking for deals like, my hair salon deal, for example, or, roll-ups. They love these things. So that's an area, to break into if, and I'm happy to, if there's a deal that you're looking at, and you want an introduction, happy to. So because I've been blessed by folks that have introduced me to folks and gotten me into those circles.
Yeah, yes.
So just you made it to that point. So your deal with Air Coverage, that was actually very, very complex deal. Keep going straightforward. Saying you're going to go in, reject, 300 leases, I'm going to renegotiate another 500, get financing. Just explaining that is straightforward. Having an investor understand that and say, oh, by the way, I want $4 to $5 million worth of things from you in 2 weeks. Thank you very much. Can you talk a little bit about building a deal as well as a complex deal?
Yeah. Okay. So the backdrop was there were some relationships that I had previously built, doing smaller deals and getting them interested and involved in doing the smaller deals first. That led to the bigger deal. And I said, okay, now I'm going back to you. Now I need a bigger check here. And I want you to introduce me to 5 other guys because this is going to be, a once in a lifetime or whatever. This is going to be a great moment and, a layup here because we're buying this thing. We're creating this thing for 1 times EBITDA and that doesn't exist right now. And so it wasn't, so my recommendation to you is, in that sense is, prepare yourself for that moment by developing the relationships ahead of time. Because I developed a bunch of relationships with guys, didn't transact, but I came to them when the time was right and said, all right, now I'm coming to you for money. And this is the deal I'm doing. This is how we're doing it. This is a team I assembled. This is all the consultants and advisors we've assembled for this transaction. For me, I have a background in bankruptcies and stuff, so that was a little bit easier. We had an operating partner that had a background in operating multi-unit hair care businesses and beauty businesses, so that was helpful too. But it was the nature of the relationships that I built over that period of time, even with folks that didn't even invest with me up to that point, that led me to that point.
And we've got to end here, but I would just add that, one of the things that always impressed me with the independent sponsor market is everybody, their hustles, right? You've got to, because you don't have a fund, you've got to go out and find the capital and find the, not just find the deal, but find the capital. And we found that early communication, especially with complex deals, early communication and even pre-LOI, having dialogues, and it's a different dynamic, finding and executing on due diligence and deals is different than the marketing and that sort of thing. And it takes 2 different brains. But starting earlier and giving good communication and clarity is what helps us. But thank you, everyone. If there are other questions, happy to take them afterwards and enjoy the rest of the day.